This is Chris from thetraderguy.com taking a look at gold, and you can see that the trading session here for Wednesday was pretty negative as we kicked off, but we turned right back around to jump into this kind of channel wedge thing we've got going on. Daily candlestick is going to end up forming a hammer. So there's a couple different ways you can look at this. 2000, of course, is a magnet for price. It's not a huge surprise considering how important it is. Now, when you look in the futures market, there is a little bit of a gap in this area that has yet to be filled right around the 50-day EMA. So that is the bear case. That being said, I have no idea why you would be trying to short this market right now. Yes, we had a nice bounce and we are kind of struggling here. Go ahead and hide the 50 and the 200-day. Or I guess hourly at that point, and here we are in the hourly chart. It does look like we're probably going to continue to see a little bit of negativity. However, that negativity is short-lived and it should be thought of as a buying opportunity. Spot gold ended up losing pretty much, I want to say it was down about 1.5% at one point during the day, ended up down 0.5%. So definitely a nice recovery. So for myself, bump 210, I'm interested in going long. So right around 2011-ish or so. I think at that point, then the momentum is going to take off and could go looking towards 2040. On the other hand, if we pull back, I'd be very interested in trying to find some type of support action right around 1955, 1960, and that is something that I don't want to see get there too quickly, but I think this is an area where buyers will step back into the picture, so it'll be interesting to see how this plays out. Now, pay attention to the US dollar, but that's not the be-all end-all of what's going to happen in the gold market. Typically, there's a negative correlation, but not always. The entire 1980s, for the most part, saw both rise, so keep that in mind. It could come down to wealth preservation, and that has been a huge driver of what's going on in gold. So looking at the hourly chart, I do think we have an opportunity to pick it up cheaper. Let me go ahead and remove the drawings. Looking at the daily chart, certainly looks like there is a lot of support underneath. Looking at the weekly chart, now you can start to make the argument of, is there something uglier about to happen? I don't think that's the case. However, I would keep an eye on the area right around 1925. We give up 1925, then we could have a fairly steep correction to 1800. For myself, that's the least likely of scenarios right now, but we are in an area that we have struggled in the past. So the most likely situation here, either we break 2012 and we go higher towards 2040, or we pull back towards this area here right around 1960 or so and start to look for some type of bounce.